This is a review of perpetual inventory costing using FIFO valuation. So let's go on to the representation of a perpetual inventory card again. This is something you've seen if you viewed some of the other videos. We basically have this card that includes the date, the transaction type, the number of units involved, the cost per unit, the cost of a transaction, the number of units we have on hand, and this concept we call a cost layer, which we'll get into as we go along, and the inventory dollar balance. That's the amount of value in our inventory account. Okay, now in this case we have a beginning inventory of 60 units on hand, and those 60 units are worth $20 per unit for an inventory balance of $1,200. So what we're going to do is we're going to refer to this as what we call cost layer 0, where it is $20 per unit for 60 units of $1,200. What we're going to find out under FIFO valuation, inventory is costed by layers of cost, and layer 0 is going to be our beginning cost layer because we need to start somewhere. So let's take a look at the first transaction associated with FIFO valuation. In this case, this happens to be where we're making a purchase on date number 1. We're going to have 20 units at a cost per $32 a unit. The cost of our transaction is 20 units times $32, so the cost of this transaction is $640. So in our journal entry to enter that value, we're going to credit, let's say, accounts payable or cash for $640 and debit our inventory for $640. Now also, we know we had 60 units originally on hand. To that, we're adding 20 units. So now we have 60 units plus 20 units from our purchase means now that we have 80 units on hand. But something else has happened in this purchase. What we've done is now we've added another cost layer to our inventory. We started out with layer 0 where we had 20 units times 60 or $20 cost per unit times $60, and that equals $1,200. But now when we purchase these new units, we purchase them at $32 a unit, 20 units. So now we have a second cost layer on top of the first cost layer at $32 per unit times 20 units for $640. So now our inventory balance is going to be equal to the $1,200 layer 0 plus the $640 layer 1. So now our inventory balance is equal to $1,840. Okay, now let's look at date number 2 where we have a sale and we sold 70 units. And again, if we take a look at our units on hand, we had 80 units originally and we sold 70, so now we're going to have 10 units remaining. Now, in order to properly cost this transaction, we have to do it on a FIFO basis, meaning the first cost in is a first cost out. So the first thing we do when we want to cost this transaction is we cost out the first layer of cost, which is layer 0, and there's 60 units sitting there at $20 a unit. So we sold 70 units, so that means we have to liquidate the entire layer, where we're saying is 60 units sold or liquidated from the $20 cost layer, which is actually the entire layer, so layer 0 goes away. And we have 10 more units because we actually sold 70 units, not 60 units. So an additional 10 units are liquidated from the next earliest layer, and that's going to be at $32 a unit, leaving basically a layer 1 at 10 units at the $32 layer. So what we see here is our cost of our transaction. We liquidated layer 0 at $1,200, and we liquidated part of layer 1 for $320. So we add those two layers together, and those add up to $1,520. So we debit cost of goods sold for $1,520, and we credit inventory for $1,520. Now notice that even though we've liquidated layer 0 we've only partially liquidated layer 1. We still have 10 units left in layer 1, and that's going to be at $32 cost per unit from layer 1. So it's going to be $32 cost per unit times 10 units. That means there's $320 worth of value remaining in layer 1. So our inventory balance is going to be $320. So let's go on and take a look at date number 3. With date number 3, we're buying 30 more units, and in this case, the cost per unit is $14. So the cost of our transaction, since it's a purchase, it's going to be those 30 units times our $14, and that's going to now be another layer of cost. So it's going to be 30 units times $14 layer 2 cost. So the cost of this new layer, layer number 2, is $420. So we would credit accounts payable and debit inventory for $420. And you will see the units on hand now started at 10 units on hand. Now we added those additional 30 units, so now we have 40 units on hand. And what we can see is now in layer 1, we still have 10 units remaining at $32 a unit for $320. We've also now added another cost layer of 30 units at $14 per unit for a total of $420. So now we have two cost layers, one at $320 and one at $420. So our inventory dollar balance now is $740. Okay, now let's take a look at date number 4, where we have the sale of an inventory item. Now this slide's a little bit busy, so bear with me. Again, we sold 20 units, and what we're going to find out is that for basically the first 10 units, since we're in first out, we liquidate the earliest layer first, and then the second layer, then the next layer after that. So in this case, we're selling 20 units. That means in layer 1 we had 10 units remaining. So we sold 10 units were sold and liquidated from the remaining $32 cost layer 1. So cost layer 1 is going to go away, but we have to value those first 10 units at $32 a unit for $320. We also now have to value the next layer, and that's going to be 10 units but at $14 a unit. So our cost layer valuation is going to be 10 units times $14 for $140. So our relief of inventory is going to be the $320 plus $140. So our cost of this transaction when we sell these units is going to be $460. So we credit inventory for $460 and we debit cost of goods sold for $460. And what you'll see here again is we started out with 40 units, we subtract out 20 units, now we have 20 units remaining. So now we can see we've liquidated layer 1 and we've had a partial liquidation, 10 units of layer 2. So what's remaining now is layer 2 cost at $14 a unit, so we have 20 units left for $280. So our inventory balance is $280. And that ends our FIFO perpetual inventory calculation review.